Hey guys, so in this next section, I'm going to be talking to you about disclaimers and risk, because a lot of times with any investment, we can always assume some type of risk. And I want you to understand risk in a much greater sense than just giving you a disclaimer saying you could lose money doing this, which is true. But I want you to understand how and why you could lose money so that you actually eliminate risk from your mind, which would paralyze you from actually taking action in this game, because you'll understand how the risk in the watch game differs from other places. So I'm going to take the whiteboard here in a second and show you that. But just remember that with any investment, there is always the possibility of risk, especially if you don't follow step-by-step instructions and really pay attention to becoming good at this, because the more excited you get at doing this, the less you pay attention and the more you make your own deductive reasoning without actually having the real learning that we're going through here behind you. You're going to run a significant amount of risk. And I want to eliminate that risk. So I'm going to show you how risk works here, which we're going to cover in detail in a section called the BCV. But in this case, I just want you to understand. So in the stock market, you make a purchase here, for example, that's going to be $10,000 in stocks. And there's really two ways the stock could go. It can either go up, it can stay, not do anything to your money, or it can go down. There's only really two big things that worry you. One is it going to go down and how low? Or B, is it going to go up and when should you get out, right? That's really how a stock works. Now, here's the interesting part with the stock is that while this is your baseline here, this is what your investment is, it can quickly go either ways. And so while you can do some studying and make sure you go in the right direction, you also have to be careful because you can immediately lose some money. And in many cases, you're going down to zero. Now, the more aggressive the stock, then obviously the more aggressive the opportunity to win as much as the opportunity to lose. This is a little bit different from watch trading, because you see in the stock market, when you're investing in stuff, this is all digital, meaning you're not actually getting a piece of the company in your hand, right? And you're not walking in a building and saying, hey, I own stock here, so I own this building. Instead, what you're really getting is just the digital ability to put a very small amount of money into a very big pot and hope that that is spent accordingly in order to give you a return. Now, in the watch market, it's a little bit different than the stock market, because you see what you're investing in, and this is why I love alternative assets, is you're investing in a watch, right? We're going to draw a watch here. This is a little watch. This is, there you go. So the watch in itself here has a value. Usually it's precious metal. It's not. It's stainless steel. And in itself, there is an item. And this is what I call an asset, meaning there's an item that has some level of worth, right? And this is so important to understand because unlike a stock, but rather just like real estate, let's say you're investing in houses, cars, or watches, and let's say the value of the item goes to zero, well, you're still holding the item in your hand, right? And this is the power of watch trading, is that just like real estate, your house could be worth nothing, but you still would own a house. And that is the big difference between alternative assets and then, of course, stock or liquid assets that were notoriously known like mutual funds and so on and so forth. So with the watch game, here's where or how the watch game differs. While in the stock market, a watch can typically, a stock can typically go up or down. In the watch market, the way it actually starts with the depreciation is quite simple. The watch comes out new and it either goes down and then stabilizes, or it goes right here and it trends up. And so the important thing here to understand is that the way we're going to teach you watch trading is not always to buy new here, but first it's to understand the market and how to predict if the market is going to go up or down. Two, we're going to teach you really right here how to buy watches here, which are what we call the BCV, the bottom cash value. And unlike cars and real estate that are continuously fluctuating with time, watches do not. Once they hit that bottom, they kind of stay there at their bottom and then trend back up or stay even. And so a lot of the graph, once you see here, would go something like this during the continuation of the life of the watch, meaning that at any given time, the stream here, you see, like the top and the bottom is really the risk factor. It never goes all the way down to zero. And so what's really important to understand here, which a lot of people miss, is that when you're making good watch investments, your capital, the capital you're using to invest in the watch is almost never at risk if you bought the watch right, because what you're doing is you're simply transferring capital onto the asset which you hold in your hand. So there is the risk here is that the item is going there and the item may or may not be resold for the same amount. So you see, now the risk is back in your hands, unlike the stock market, which you have no control over. So why is this good? Because if you're making good decisions on how to buy the watches, then the only thing you're risking is the margin of profit, meaning you could make a profit or you could break even on the watch. And that's a very different type of investment than what you find out there in other places. And so the entire investment in itself is really tied to your ability, not so much to the actual investment in itself of the item, because the item itself is nothing more than a transfer as capital transfer rather than an actual buying of an item and then saying, oh man, what if this item becomes worth zero? It doesn't work that way. And so we're going to cover that in full during our training, so you understand the BCV, you understand the wealth transfer methodology and some of these things in detail. One of the things, again, this is the disclaimer section, so I want you to understand that, again, it is very possible that if you buy the watch wrong, you expose yourself to more risk than you should. As a result, potentially losing some money doing this. You also have to realize that the biggest area of fear for watch traders is not really in buying a watch wrong or make a mistake, because we all learned that stock traders sometimes buy stocks high, sometimes low, they make good and bad trades. But what is most important that you need to be extremely careful of is this industry is full of scammers. Individuals who want to try to defraud you by sending you fake cashier checks, individuals that want to sell you fake watches, individuals that want to get you to sell them their watches with fake funds. There's thousands of ways you can be scammed. And so it's very important that you pay attention to this really carefully. We have an entire ecosystem and community built around the Watch Trading Academy that you must learn to use. Because the more you try to do this on your own, the more you're going to find yourself positioned in a way where there are easy to avoid red flags you could have avoided should you have asked somebody in our community, should you have interacted or been mentored by someone else in our community that has done this more, that can answer questions and so on and so forth. So I think it's so important to understand that if you're going to be successful at this, you have to understand that watch trading in its learning stages is very much a team sport, to avoid any type of pitfalls, any type of issues, and also protect yourself from scams. Now, I don't want to scare you with scams because we're going to cover them in detail in this course as well on how to avoid them, but I want you to understand that when your gut feeling tells you something's off, when something seems just odd, you don't need to avoid the deal and run away. You can check in with the community and get someone else's feedback and see, hey, man, everybody's saying it's a scam. They must know something I don't, so let me walk away from that deal. So don't let your ego play a role in this, and also don't forget that the people that lose money in this game are the people that are most arrogant in their approach to watch trading. They believe that maybe they get lucky on one trade and then they're suddenly master of the trade and now they're going to go make millions of dollars. That's not how this game works. You're not really a good watch trader until you've consistently traded watches in volume for the next 3 years. So do not allow your arrogance to get ahead of you and push you into illogical mistakes that could have been easily avoided should you have humbled yourself down to more of a student rather than instantly trying to become an expert in the trade with just 1 or 2 trades. So do take time to perform each trade, do take time to pay attention, and do take time to really put all the formulas we cover to the test and ask yourself, am I making a good trade? Am I positioning myself for risk? And how am I lowering my exposure to risk, allowing me to continue trading with no real capital risk in itself? Because you can always risk profit you haven't made, but it's always difficult to put yourself in a position where you risk the capital you've invested in order to buy a watch. And so this has been the disclaimer section. Let's move on to the next one.